Hello, and welcome to our discussion on how to get rich during a recession. In today's video, we'll be exploring strategies for building wealth during economic downturns. Number 1. Look for opportunities in downtrodden industries. During a recession, some industries may be hit harder than others. However, this can also present opportunities for investors who are willing to take on additional risk. For example, if you believe that a particular industry is poised for a turnaround, you might consider investing in companies in that industry. It's important to carefully research and assess the potential risks and rewards before making any investment decisions. It's also important to consider the macroeconomic environment and factors such as consumer behavior, technological trends, and regulatory changes that may impact the industry's prospects. Number 2. Consider buying assets that are undervalued. During a recession, the price of some assets may decline due to market conditions. This can present an opportunity to buy assets at a discounted price and potentially sell them for a profit when market conditions improve. You'll want to consider the asset's intrinsic value and its potential for appreciation, as well as factors such as liquidity, risk, and return. According to a report from the International Monetary Fund, stocks tend to perform well during recoveries from recessions, with an average return of around 15% per year. However, it's important to note that past performance is not a guarantee of future results, and stock investing carries risks, including the possibility of losing money. Number 3. Diversify your portfolio. A recession can be a volatile time for the stock market, and it's important to diversify your portfolio in order to manage risk. This might involve investing in a range of asset classes, such as stocks, bonds, real estate, and commodities. It's also important to consider the specific types of investments within each asset class, such as large cap stocks, small cap stocks, and international stocks. By diversifying your portfolio, you can potentially reduce the overall risk of your investments and improve your chances of success. Number 4. Stay the course. It can be tempting to panic and make impulsive decisions during a recession, but it's important to stay disciplined and stick to your investment plan. This might involve holding onto your investments and riding out market fluctuations, rather than selling in a panic. It's also important to remain diversified and avoid concentrating your portfolio in a single asset or industry. By staying the course, you can potentially maximize your chances of success. According to a report from the Vanguard Group, investors who stayed invested in the stock market during the 2008 financial crisis and subsequent recession were able to earn positive returns over the long term. The report found that a diversified portfolio of stocks and bonds earned an annualized return of around 8% per year from 2009 to 2019, despite the market turmoil during the recession. Number 5. Take advantage of low interest rates. During a recession, the Federal Reserve may lower interest rates in order to stimulate economic growth. This can present an opportunity for investors to take advantage of low interest rates and potentially earn higher returns on their investments. For example, you might consider investing in a high-yield savings account or a certificate of deposit, or you might consider using low interest rates to your advantage when taking out a mortgage or other loan. According to data from the Federal Reserve, the average interest rate on a 30-year fixed mortgage fell to a low of 3.3% in 2020, down from a high of 4.9% in 2018. This presented an opportunity for homeowners to refinance their mortgages at lower rates, potentially saving thousands of dollars in interest payments over the life of their loan. Number 6. Consider alternative investments. In addition to traditional investment options, there are other strategies you can consider during a recession. For example, you might consider investing in alternative assets such as cryptocurrency, precious metals, or collectibles. These types of investments can be more volatile and carry additional risk, but they may also offer the potential for higher returns. It's important to carefully research and assess the potential risks and rewards before making any investment decisions. Number 7. Take advantage of government programs and incentives. During a recession, the government may offer programs and incentives to help stimulate economic growth. These might include small business loans, unemployment benefits, and tax credits. By taking advantage of these programs and incentives, you might be able to improve your financial situation and potentially build wealth during a recession. According to data from the Small Business Administration, the Paycheck Protection Plan, a government program designed to help small businesses weather the economic impact of the C-19 pandemic, approved more than 5.2 million loans worth a total of nearly $525 billion in 2020. The program helped small businesses keep their employees on payroll and keep their doors open, potentially helping to preserve jobs and stimulate economic growth. In summary, while a recession can be a challenging time for investors, it can also present opportunities for those who are willing to take on additional risk and stay disciplined. By diversifying your portfolio, taking advantage of low interest rates, and considering alternative investments, you may be able to build wealth during a recession. Building wealth is a long-term process and requires a combination of discipline, patience, and a clear financial plan. By setting financial goals, creating a budget, and saving and investing consistently, you can potentially increase your chances of building wealth over time. Thanks for watching. Please make sure to like and subscribe.